Hello traders and welcome to another video review. Today is Friday 29th of April 2022. Let's take a look at the Forex calendar. Some data had been published overnight, but they are not that much important. However, we got plenty of data scheduled for release during this early London trending session. GDP from France disappoints investors, 0% versus 0.3 expected and 0.8 the previous reading. Consumer spending minus 1.3. Data from the Switzerland retail sales minus 6.6%, way lower than 13% expected. We are still waiting for the consumer price index data from from France. Let's take a look whether this one was updated. So it's going to be interesting to see whether there's update for that. It's yes, the consumer price index from France better than expected, 0.4% versus 0.2%. However, it's still way below 1.4% for the previous month. GDP from Spain, QOF economic barometer from Switzerland, and the key event of the London session, GDP from Germany is expected to increase from minus 0.3% to 0.2%. At the 10 o'clock, there is still scheduled for release M3 money supply and private sector credit from the Eurozone. At 10 o'clock, there's SNB Swiss National Bank Chairman Thomas Jordan speech, and at 11 o'clock, consumer price index, core consumer price index, and the GDP revised data from the Eurozone. All of this scheduled for release at 11 o'clock a.m. So the consumer price index is expected to increase from 7.4% to 7.5%. However, the real data the actual data might actually really beat these expectations a little bit to the upside, like 8%. Core consumer price index expected to increase, and the GDP is expected to stay on the same level. Very interesting thing. Let's keep an eye on the data from the Germany and of course the Eurozone. Euro dollar will be one of the markets that we'll definitely take a look at. Data from the Italy, not really that much important. However, we got the key bank rate announcement from Russia at 12:30. There is a market expectation of a cut from 17% to 15%. Very interesting. 2:30, there is a gross domestic product from Canada. This data are expected to increase actually from 0.2% to 0.8%. Very interesting. And more data is coming from the US during the New York session. PCE core, personal spending, personal income, Chicago Purchasing Managers Index at 4 o'clock, and University of Michigan inflation expectations at the 7 p.m. We got back a Hughes US recount for all of you crude oil traders. So some data from the US as expected to release, but there are not really that much market movers. The bigger market mover is gross domestic product from Canada and data from the Eurozone. So let's start the technical part with Euro dollar review. Daily time frame chart of the Euro dollar is showing signs of course of a deterioration, the further deterioration away from the lower channel line. Let me just change the color of the recent technical resistance. 1.0639 is the technical resistance, very close to the lower channel line. Recently we hit the level of 1.0471. Right now the market is trying to bounce from the extremely oversold market conditions. Just as we talked about yesterday, there is a chance for the market to bounce because the market conditions are very oversold. So right now what we want to see is of course the divergence. We got the divergence between the price and the RSI indicator, and now we want to bounce towards 1.639 in order to resolve this divergence, right? So the trend is still down. It's clear as the sun that the trend is still down. There is nothing to do here. We are below the post-COVID low. Right now we are heading towards the 0.0343, which is the low from 2016 actually. So please pay attention to this level because it's a very important technical support. US dollar to the Canadian dollar technical analysis. Let me just zoom in and see what is going on here. As you can see, our scenario for the ABC correction didn't actually happen. The market prefers to still stay inside of this range, and this range makes this correction even more complex and time consuming. Recently we made a pin bar. We made a pin bar around the level of 1.2875. This is that pin bar, and usually after that pin bar we should have some kind of a decline. As you can see, we got the today's candle. There is still some time for this candle to close. However, this candle is going down towards the technical support. The technical support is moved right now a little bit higher towards 1.2675. The other support, let me just change the color. The other support is seen at the level of 1.2586. This is that support. It goes with it would be green as well, and 1.2570. This is the other support, very close to the previous one. So this is the support zone. We are trending without any kind of trend. We are trading inside of the horizontal zone between 1.2403 or 1.2596, and this is very long lasting zone since the beginning of the 2022. So the US dollar to the Canadian dollar is going nowhere. Congestion, eventual congestion or horizontal trend is still on table. Nothing, it doesn't actually looks like the one on the other market side, bulls or bears, wants to break above or below one of these levels. So this is the US dollar to the Canadian dollar. Let's take a look at the gold, the spot gold market, whether this recent scenario was continued, and the daily time frame chart of gold looks like the 5-wave decline had been completed. So maybe this decline to 100% will not be that easier to hit. Let me just take a look at the coordinates. Okay, what am I right now trying to do is to take a look at the 61%, of course, of the Fibonacci projection. So let me just hit the projection level. I think it's somewhere here. Style is 0.61, and as you can see, 61% of the projection to the downside for the wave C. This is what I mean. This is projection for the wave C. The other one, the 100% projection, 61% projection. There is something odd here. Let me just take a look at this 61. Okay, this is of course the technical retracement, so we don't need this one anymore. And where is the 61 here? 0.61 should be up. There you go, it's up here, 1889. This is the first minimum target for the wave C, and this level has been hit. So maybe this wave C has been completed around here, almost to the point of the 0.61. Fine. However, it would be much more better for the market to hit 1821. For the technical reasons, of course. What do we have here? The lows of the wave A, high of the wave B, 1, 2, 3, 4, 5 ways to the downside. We got the wave C completed just below the 61%. Now we can go higher. So what I'm doing right now on the gold, I will just cancel the wave, put some trend line here to see whether this market might broke above this trend line here, wave top and wave A. There you go, it can stay like that, not a problem. Let me just zoom out a little bit. There you go. And this is the current scenario for the spot gold market. What do we need to do in order to see the confirmation of the low of the wave C? First thing is breakout above 1911. Then of course we need to break above this zone here, 1965, 2000. Basically this is the most important zone, and the breakout above this zone, above the short-term trend line, will directly expose 2075. Okay, however, please notice the fact that we might be developing a much more complex and time-consuming correction in the wave during this cycle. So just the fact that we got the ABC correction, which is a zigzag, doesn't mean that this correction has been completed, right? For sure. Right now we need a confirmation that this cycle is completed. We need a very, very smart and very, very dynamic V-shaped reversal. Then we can say, okay, the uptrend is resumed, right? If there is no such a thing developing on the spot gold market, that means of course that something else is going on. Maybe this market will develop another time complex and time consuming wave, right? So please keep an eye on this market. And last but not least, let's take a look at some Bitcoin as usual at the end of our part of the technical analysis. As you can see, we are still below the short-term trend line. Let's stick with that. We didn't pass the high from the 26th of the April, which is at 40,777 basically. So this is the high. We didn't pass it. Just around this level, there is of course the technical resistance that comes from this short-term trend line. So if we break above the 40,777, that means we got first indication of the uptrend resuming. Okay. What else? Technical support. Another technical support, very interesting one. It will be at here at the lows of this recent decline, 37,747. This is the technical 7,747. So this is the technical support. Plenty of supports here. One below as $37,051. So it might look like bulls are trying to get more momentum and get more attention. However, please notice the fact that we are still below the level of 50. Sentiment is negative and bears are in control of Bitcoin. So as long as we trade below 42,961, the outlook remains bearish. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.